What's up everybody, Tom here with another video. Well, it's that time of week again. It's time for us as a community to take a look at the stock market together for the week ahead. We'll be taking a look at the latest news, we'll be taking a look at the economic calendar, and also our top-down technical analysis approach together through the S&P 500, NASDAQ, US dollar, volatility index, gold, and silver. There's a lot at stake this week, and we're only a few weeks away now from the US election. But also, stimulus concerns are starting to rear their ugly head in the markets, and we can see why when we looked at sector rotation last week. This one should be good. Stay tuned. Okay everyone, well I can say I'm pretty pumped for this week. I think it's going to be a great week of trading, and there's going to be some great opportunities in the markets. Specifically, I think we're starting to see a very clear picture come in and a clear concern from the market in certain key several sectors. Here's the heat map that we always look at together, and it showed us some of the stocks that did report last week, with some of the banks coming in and not performing well to market expectations. If that's setting the scene for what's in the week ahead, it could be very, very interesting. So remember, on Monday, we saw massive euphoria come into the markets again. That euphoria was then paired by selling, and more importantly, there was selling into the close on Friday. Now, we always talk about this on the channel. One of the most important things that we're looking at in terms of understanding what Wall Street's doing is if they're selling into the close on Friday, they're deleveraging, de-risking, and they're concerned about weekend event risk or just weekend risk at all. So we ended up the week here, or ended up this 7-day period, up a little bit. But overall, I think it's the sector rotation that shows us the most. So the energy sector was down because, of course, several countries are now doing further shutdowns, if not second shutdowns or third potential shutdowns, and that's hurting demand side of energy. But I think this one's very interesting. XLY, that's consumer discretionary. And basically, this has all got to do with the stimulus. We're not seeing stimulus going to people that need it. And specifically right now, if we have to think about what the market expected some kind of stimulus done already. Now, will we get a stimulus? Of course we will. No matter who wins, there will be a stimulus. But because of politics, we're going to now see most likely no stimulus deal before the US election. We're going to see it after that. And this is going to take a certain dampener, especially on the consumer period over the most important time of the year, being November and December. We're going to see a slowdown in potential sales as people are really struggling out there. And this is where the turning point happened. There was a lot of euphoric kind of idea of stimulus, and then we all of a sudden started to see a bit of a sell-off in XLY. And now that we're in earnings season, they might be giving guidance that's weaker than expected. And if that continues, it will not look good. For the week ahead, we have earnings season as well. We've got several key things that I think I'll be looking at. Netflix will be important. Tesla will be important. Snap to a degree will be important. And also even Intel and Coca-Cola, etc. It'd be interesting to see whether Coca-Cola actually is improving or declining still due to the crisis. But overall, Tesla and Netflix will show a lot of sentiment into the markets, especially ahead of the other bigger techs over the next couple of weeks. Will they be able to hold their gains? Tesla's actually selling into this news event. Very rare for it to do so. So there are obviously concerns over the current valuation on that stock versus what we're seeing in the market potentially as an expectation for earnings. When we go over to the put-call ratios, Friday was a 1.5 reading on the S&P 500 put-call ratio. If we take a look at the overall kind of week, we did see an increase in puts overall last week, which doesn't necessarily show us an increased amount of bearish action. And that's because, of course, when we have an increased amount of puts, it's less likely that a market is going to crash or have a corrective dip. That's just a statistical fact over time. When we take a look at volume, a lot of people will question, well, why did we have so much volume on Friday? What was going on there? Also, why did we have selling? Well, I think a lot of this comes down to, of course, options expiry in the US. And you'll notice here that in October, we have the 16th and 17th being the options expiry days, and of course options last trading days. So this always creates a larger volume event than normal in the markets. On to the technical analysis, what we're always here to talk about together. So there's a lot to cover in this, and we're going to be going through the S&P 500, NASDAQ, and every other thing very, very soon. But I think dollar is a great place to start. US dollar shows us whether there is concerns in the market, and it's actually acting pretty technically. So we saw previous resistance, or the peak over here, acting as support there on Friday, and buying pressure coming back in. Now we have this 93.86.90 kind of high, and we've got that lined up because it was previous resistance over here on the left, previous resistance here, and previous resistance here. So now what we expect this week is we expect it to go back and test this 93.90 area. If it breaks through and creates a new high, then we are pretty much looking at further bullish pressure coming into the market, especially when it gets above 94. That will then signal 94.50. And as we know, traditionally during this crisis, if US dollar is going up or strengthening, we've seen weakness in the S&P 500 and NASDAQ overall. A strong dollar means strong amounts of money going into hedging. And of course, the world currency being the US dollar has always been that kind of safe haven bet for many, many people out there. What's the VIX telling us? Is the volatility index showing us any of those things? Well, there was a little bit of a spike into the close on the VIX, and this is of course because of the decline in the market due to the risk-off sentiment coming in. We're still in this 25 to 30 channel, guys. We're still exactly where we were a few weeks ago, and this remains the very important zone, I think, for longer term swing traders and investors. If it breaks above the 30 and closes on the 4 hour, we know that we're in for fear. We're in for corrective dip pressure in the markets, and that could mean some pretty big moves. If we get under the 25 and close, I guess we're on to more bullish sentiment, and maybe it hovers in this range into the US election. We don't know yet, but it's certainly worth putting alerts on your chart and watching this volatility fear index over the next couple of weeks. On to copper. Copper overall declined a little bit off that resistance of 3.1. We saw it come back down. It's now testing the 3.058 kind of zone where it was previous resistance and could act as support. No real guidance here from copper. Probably this week what I would be doing is I'd put a support and resistance line alert on this particular commodity. And I would say basically if we get above this previous 3.1 zone, I'd be looking at bullish kind of moves and bullish overall trades. And if we get underneath the 3.02, I'd be looking at some bearish looking trades on the markets in general. I think that copper gives us a good indication of what's happening. We call it Dr. Copper on this channel for a reason, and it gives us an idea of whether the market believes in the recovery in the US or not. And at this stage, we're in this little bit of a trap zone, but it's more bullish, of course, than bearish overall. So let's now take a look at the markets. Let's take a look and start with the US 100. We'll use the US 100 futures here. And what we saw was very interesting. The market came up and just tested the previous support over here as resistance and then sold off. Now notice that happens around that 12,000 zone. Now what have we spoken about a lot on the NASDAQ recently? It loves its 200-point moves. It loves going from an 11.8 to a 12,000 to a 12.2 to an 11.6. All of these levels are very, very important. So that remains for this week as well. If we're going to draw up our lines in the market and have an idea of where we want to be, targeting, I guess, daily trades or just targeting entry points, we probably want to be drawing every 200 points here on the NASDAQ and looking for support or looking for resistance zones. Remember, this has happened pretty regularly throughout this decline. We've basically had these 200 points acting as support and resistance. More notably as well on the 4 hour, we have here the NASDAQ hitting the 50 exponential moving average, and that always acts as a little bit of support. We saw it act as support and it closed there as support. I'd be looking at a break under this 11,760 zone, so a break and close on the candle. And if that did happen, we're pretty much going to 11.6. Why will we go to 11.6? We have a huge amount of previous resistance points around this zone, and it should act as some form of buying support. That's pretty much the big buy zone for a lot of people in the markets for the week ahead. and expect the economic calendar and all of these news events to be pushing it through. I think if you saw really weak action from Tesla and Netflix, I would not be surprised at all to see the US 100 at least at 11.6, if not lower. So every 200 points, I'd be drawing up lines this week. I'd be going and having a look at, of course, the weekly and the monthly as well. The weekly closed very weirdly. So if you have a look at this, we'll get rid of these lines. The weekly almost was closing as a shooting star, or some people will know it as a pin bar. Now, if we got another weekly close down, as in the candle kind of looked like this and closed bearishly, what that would be doing is it would be showing us a lot of bearish sentiment. We effectively tested the high, we're then testing it again and rejecting it and showing bearish sentiment. And I wouldn't be at all surprised if we go back down and test new lows if we get another bearish close into the US election this week. This is not the kind of thing you want to see as a bull. We want to see good, nice, bullish price action, but not this euphoric, strong move like we had on Monday. That was clearly a fake out kind of period. If we go down to, of course, the daily, overall, we're just seeing a bit of a decline, potentially back down into the 20 moving average, which is right where that 11.6 is. Remember, the 200 points are the key here. And if we have a look at the 1 hour and the price action that's been going on here, I don't think there's too much to really gain from this until we see the market open. But we do have a 2050 cross that is maintained being a cross all the way down. It didn't quite get up. It's still going down. So still showing us a decent amount of bearish pressure here. And remember, that lasted there for a long, long time previously when the cross happened. So this cross being intact is pretty important, I think, to sentiment on the US 100. Let's take a look at the S&P 500 now. So we'll go out to the monthly and just quickly discuss what's been going on here on the monthly charts. So overall, the monthlies have basically been pretty wide range candles. We've had very, very large moves, but the moves are starting to decline. You'll notice that this move here was really, really extreme. And then of course, this one was a lot smaller so far during this month. So the volatility to a degree has come out of the markets, and we've seen that when we look at the volatility index and the fear in just general in the market overall. The week ended pretty much long leg doji, indecision candle right around the 3,500 zone. So we'll notice that the market closed at 34.83, but overall the previous body closes were around that 3511, 3,500 area. So right around where you expected body resistance to happen. Long leg dojis mean indecision in the market. So obviously the market's not telling us anything from the weekly close. And if we go to the daily close overall, again, mostly a rejection in the market here, followed by a decently bearish candle on the Friday into the close. I don't think there's much to be said here other than, of course, the 20 moving average is right down here at this 34.25. And that was, of course, previous resistance and could act as support again. I think all of these levels will be important. This would happen at the exact same time that, of course, the NASDAQ would be hitting the previous support as well, that 11.6, and they should be synergizing around this level. So expect the 20 to have buying pressure this week, and I wouldn't be surprised at all if we see that, especially with a couple of bad earnings reports. If we go to the 4 hour, nothing much again to say here other than we did fill the gap. We bounced up and then we closed basically underneath at exactly the same level, this 34.80 zone, acting again as partial resistance and then of course now as support. I don't think I'd take too much stock into this, but I would be looking at, of course, a break high as a resistance that I'd put on my lines and alerts, and of course back down here at that 34.25 for the week ahead. We'll be taking a look at that and more on the live Bell session. We'll be going into the smaller timeframes as well once we have a bit of an idea of how the markets are opening on the futures ahead of the open. Definitely join us then. And if you haven't already, definitely subscribe and hit that alert button. So on to gold and silver. Is gold and silver showing us anything about whether the market is looking bullish or bearish? Well, gold is putting huge pressure here on, of course, this trend line. Now, a few people have been talking about this one. The community's been talking to me about this as well. And a few people are obviously drawing up this. They're basically drawing up the top down where you've got a series of lower peaks, and this trend line that comes from all the way up here is showing us that we're trapped within gold. I think it's very valid to have this on your charts. There's definitely no problem with having this on your charts, but this bottom end is coming under a huge amount of pressure. And more importantly, the peaks are getting lower. So what this means is we have a peak, we have a lower peak, and we have a lower peak again, and we haven't been able to close above this previous peak over here. And all through this time, we're testing this trend line right here. So we've got, of course, the multiple support zones. We have a big test coming into Friday, and if it closes through this, I wouldn't be surprised at all for it to come down, find some support, test it from behind, and then further move down. Now, I think this will be a very bearish for gold, and of course, this will also be timed with US dollar moving up. But overall, if we do get through and close below this zone, I wouldn't be at all surprised to see gold back at 1850 over this week. There'll certainly be a bit of